2019, and it's 9:36 a.m. in London when we're doing this market update. Let's take a look at the markets. It's definitely a bit quiet. It's definitely a bit sort of summertime in the air in the markets. There's not too much activity, with the exception of the British pound. Um, Earlier today as well, we had a bit of momentum in the New Zealand dollar, but that looks like that has reversed compared when I was looking at the markets at 7 a.m. this morning. So GBPUSD is down despite having some good data. Wage growth figures and unemployment figures were just out, and wage growth was actually better than expected. But we're not seeing that love in the pound. So we're going to talk about that. Otherwise, everything else is a bit quiet. Crude oil prices are up a tiny bit, but they were down with about 1.5% yesterday. So they're up with 39 basis points today. So it's not a big difference. Sorry, the volatility seen here is sort of within what one could have expect following a decline like the one we saw yesterday. Otherwise, stock market's a bit quiet. German DAX is looking to bottom out. So we're going to talk a bit about that as well. In fact, we're going to talk about most of the major markets, right? But sort of out of interest from just looking here, GBPUSD, sort of the only thing really super interesting. And let's begin with the pound, right? So we just had some data from the UK, and we can just look here on Twitter. So we can just grab one of. So let me see if I can actually find it now. So this is just my Twitter feed. There we go. Let's use Richard's update here. Richard says unemployment as expected at 3.8%. Average weekly earnings jumps to 3.4 versus 33.1 anticipated, and 3.1% lost. And it says the GBP not interested, seemingly still Brexit focused. That's true. It is still Brexit focused. People are still worried about Brexit. And I was actually looking at a few setups here, a few markets. Look at this. This is GBP Aussie dollar daily chart, clearly going lower. Had a break here in the end of June, and now as half of the month is over in July, market's down about 350 pip. This is GBP CAD, which is also sort of extreme, just going straight down. This is pound yen. You might remember pound yen was that trade idea I shared with you guys, and we talked about actually selling here on the 8th of May. I made a bit of money on that. We touched the target here, and this just continues to slide. This is GBP Norwegian kroner. This is GBP New Zealand dollar. So this is pound Swedish kroner. So the pound in general is not doing good, and the only reason why it's not gaining too much against the dollar, I think, has to do with the fact that the Federal Reserve are looking to cut interest rates. So the dollar in general is not receiving too much love. And we talked about this last time. So we have what we call failed head and shoulders with the head, left, right shoulder, and then that was the break, and that sort of caused the market to go lower. And we had an initial breakout here already in July 10th, and now the market is going lower. Fortunately, that breakout was a false move. I was short myself, and I closed out that position after 10-15 pip, and then that was the end of it. I thought we were going to go slightly higher before trading lower, but the market is not really up for that. I think now again we may still have that corrective move, and people might still sell. The alternative, which seems more likely now, is that we take out this level, and that will be a second attempt really to try to slip below this level here, and that will probably sort of ensure weakness going forward. Otherwise, you can look at something like pound Aussie dollar. A bit too late to obviously get involved like today, but you can see here how we've been a bit of a downtrend. If you treat this like a double bottom, 2 double lows, 2 highs, then it does suggest we can go lower, maybe down to 73.36, and at least for now the trend is bearish below something like 180 85. You might have a bit of a corrective move, and that's what I would wait for. I wouldn't be shorting here unless you really know what you're doing. You're like a scalping expert. You know, you've been doing this for 2 years, 3 years, and you really make money on what you're doing. Not every time, of course, but most of the time. And so unless you're doing at that level, then I would wait for a bit of a pullback here to improve the risk-reward ratio. Otherwise, I mean, I know a guy here in the office, very clever guy. He's been trading for years. I think he's like 55 now, and he started in the industry I think when he was like 20 or something, and worked for, you know, big banks and big brokers actually, making markets in forex for a long time. And I mean, obviously from my conversations with him, you know, he voted for Brexit, and but even him, you know, he's been selling the pound. So even some people that voted Brexit, they're selling the pound, and it just has to do with pure simple economics. And I think what is interesting is that the idea is that if we get some good trade deals, yeah, we're gonna have maybe a better situation in the UK. That's gonna be helpful for everyone, and the country itself is gonna make more money. And of course, I think for a lot of people that voted Brexit, it's just, you know, having more control over what's happening in their country, which is fair. But at least in the short term, because it takes so long time to create new trade deals, on average about 7 years, it's fair to assume the pound is going to go lower. And even this gentleman, again, I think I'm quite certain he did vote Brexit, given the conversations I have with him. Even him, he's been literally been bearish and selling the pound for a long time. So if we go lower, that would not surprise me. And it just it's just simple logic. It takes we're not even out of the UK, of the EU yet. They need to negotiate a future relationship, give that another 4 or 5 years, and then at the same time, maybe, I'm not sure exactly how it's going to work out. Maybe they'll strike a deal with the US, maybe strike a deal with some other countries, but it's always going to be give and take as well. So it doesn't always have to be to the favor for everyone, because you can't have your cake and eat it at the same time, unfortunately. So from that perspective, again, if we take that out, if we trade lower, that should not come to surprise to anyone, given the current situation. So if you're looking to scalp or you're looking to trade, a break to 24.71 could be it. Otherwise, maybe pound Aussie dollar, because things like the unemployment figures and things like that, and the wage growth, unless the central bank starts to sort of get really excited about raising interest rates, they're not gonna it's not gonna support the pound. As well, you know, the housing market in the London and in the UK in general, it's not very strong. So if you start to raise interest rates now, you'll definitely kill the housing market, and you know, suddenly people are losing serious money. So I think the central bank has no intention to do anything right now. Euro versus the USD. A few days ago, we said look to buy here, hopefully look to profit up here. The market only went up to 12.87, and you got several few options here. If you didn't book profits already, you can always book profits here if you want to. There's always an issue with these range-bound markets, and the fact is that they don't have a trend. That's why they're called range-bound than stationary. The only sort of typical with them is that they're trading within a range. And the only thing we know is that people are happy to buy at the lower ends of the range. So I wouldn't focus on the Euro USD until it starts to go down to 112 again. 112, if that doesn't hold, maybe 111.50. And I think people are going to put stop loss orders just below 111.05. And then they'll try to target the upside. In general, with the Fed cutting interest rates, with the ECB as well, not doing, potentially doing things, but later on, the general bias is for higher euro dollar. Dollar yen is moving up a bit. It shouldn't become us a total surprise, because the pair here has a bit of bullish bias, right? You got a low, low, and you got yourself a low here. So you got that little momentum. You got yourself stock markets that are up. You have U.S. 10-year government bond yield going upwards. And all of these two factors, stock markets and higher yields, tend to influence the dollar yen upwards. and I think it can go up maybe to 108.50, but it's also a little bit sluggish, a little bit difficult to deal with. So I would actually wait for a break to the downside like that. The alternative would be, maybe something like this. So look for something like a break here before doing anything. That's what I would do. Gold prices, very, very boring. Um, Not too much to say or do here, really. I'm actually just going to adjust some of the spots here, some of the entry levels. So when and if, I mean, we talked about buying it for quite some time around these levels, right? I'm sticking with that. As soon as we take out 1430, I think we can probably trade upwards, right? So I think we'll leave this behind. I think people are going to focus on that level at that point. So that's what I'm looking for. There's two things here. If one wants to get involved, I think some people are going to buy the dip, and some people are going to be buying the breakout. Crude oil prices. So very non-complicated. So this market here remains in an uptrend, right? And I think we can probably trade upwards here as well. The idea was to buy down here, but you can see the market did not actually, well, you can't see, so let me show you. The market did not touch that buy zone and missed it. I think this could easily go down a little bit. I think we can trade, 59. We'll touch that level, I think. This is a fragile uptrend, because technically you have like this little section here weighing on price, right? So it might go up a bit, but then lower. Doesn't mean though I think it makes sense to sell. Rather let it go up, and then maybe it goes down and around, I think 59 if we're gonna get involved early. If not, around here, I think the market is probably gonna try to build a long position again. That will be a bullish position and probably hit the high and then probably upwards. S&P 500, there's not a lot of activity going on here. So I continue to be bullish about 29.59, and trend is bullish. And if you're not already long, I think you need to pull back a level between 50 and the 38% Fibonacci level. That would be good. So around this area, so that would be 29.94, and then probably upwards like that. Very straightforward. And German DAX, I'm finding this very interesting. So as you know, I've been talking about that for quite some time. Let me hide everything. So you can clearly see here how we're dealing with a bullish trend, right? Creating higher and higher lows throughout 2019. You got low here, low here, low here. This low here is the most important one right now, which is 12,152. And with the help of that, because this is the genuinely the trend defining level, okay? That's the level that people are focusing on. So from the low to the high, you can put your fibs, which I did here. You got your first 50, third fib, and 8.6. The market, I already said, probably going to start to bottom out here. And the market, unfortunately, slid a little bit more than I thought it would do. But it's looking good. Yesterday, we had our first bullish day for quite some time. If you look at the 5 hour, actually, let's just go to 1 hour. You see, we're creating lower and lower highs. But then that ended yesterday, and we got that first bullish day. We still have, this is just a very short-term downtrend. Now you have a different degree of a downtrend, because it's usually like that, like this. You're in a downtrend, goes like that. It's very, very much very steep, and then you have a little bit of a pullback like that, and then it continues to go down again. And then you can sometimes break that, and you can still be like that, and then suddenly it's not like that. So you have this, which is a very strong downtrend, and then you have this over here, which is a less less steep downtrend, and then you have this, which is even less steep. I don't know if you heard about GAN. They do these similar levels like that, and then eventually what happens is that it doesn't make any sense to actually be drawing trend lines like that. Suddenly it makes more sense drawing them from the bottom. And in the case of the German DAX, we finished this section here. We finished that little there, like that. The question is now, is it just gonna go down again like that from here, or is it gonna go like that? And that is when we use what we call multiple time frame analysis. So as you know, the DAX is doing like this from the beginning of the year, and now we're sort of challenging that low here. So the idea is that the general overriding trend is the correct one, and the short-term one is the false one. So obviously when you zoom in on a 1 hour, you're gonna see actually looks like this, right? And again, we sort of ended that steep part, and we're pretty much here. And I think if we start to trade higher, we'll do like that. So that's where we are right now. So this is the steep section, this is the less steep section, and it's not so difficult to figure out that maybe if we trade above something like 12,439, which is the high, and then we would have concluded this is a corrective move, and from that on, most likely this trend defining level, which because we're so close should probably be slightly lower, but if we take that out, this will come the new trend defining level, and then we could probably head up to the high, and then after that we head much higher, especially given the way US stock markets are moving ahead here and being bullish. So that's my outlook for the German DAX, and I find this rather interesting as well. Okay, I think we covered most of the markets. Don't have any questions today, so we're going to wrap things up. Yeah, no questions today, which is alright. But we have 11 people watching. If you are have a YouTube account, don't forget to hit that like button. It's really, really important. Don't forget as well to check out the homepage, publishing quite a lot of content here. If anything is logged, you just need to become a member. It's free to join. You just need to register. So make sure you do that. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow for the next market update. Thank you, and bye-bye.